Before you take a leverage trade, you need to watch this video to avoid huge losses. Now, one of the main things why people get wrecked, they get liquidated from leverage trading or trading futures is because they do not ask themselves these questions. They get excited when the market is going up. They get excited when it's alt season. They trade with emotions. They trade without logic. They trade without using any calculated risk whatsoever. And this is really the reason why people lose a lot of money and get liquidated. This is how I've gotten liquidated many times and blown a lot of accounts, meaning that I wiped my entire trading account in crypto because I was not asking these questions. And so once you actually ask these questions before you take any single trade, you'll be so much better off and you'll have a high likelihood of success when it comes to actually trading. And so let's get on with the video. I made a cool little presentation for you guys, and I hope you like it. By the way, guys, if you don't know who I am, I'm Ken the Crypto. I've been trading and investing in crypto for over 8 years. I've been through multiple bull cycles, made over 7 figures trading crypto, lost it all, made it back again. Subscribe to this channel if you want to see more crypto trading content and alphas. And so it's 6 questions that you need to ask yourself. Number 1 is, what is my one sentence thesis? This is the one sentence of why you're really getting in this trade. You have to get in this trade for a reason, not just, oh, I'm gonna take a trade. I'm gonna hit the buy button and hopefully it goes up. If you don't have a thesis before you make a trade, you're simply just guessing or you're just following people blindly. The rule is one market condition equals one price expectation, which means an if-then statement. If this happens, then this is how the price is. If the market is like this, then the price will most likely be like this. And so an example is, if Solana can hold $170, then WIF should tag the range high. Then WIF should hit these price points. If Ethereum holds $3,500, then a lot of meme coins in the Ethereum network will shoot up. If BTC dominance stays under 63%, then alts should continue to print or stay above these current levels. And so as we see right now on TradingView, we see the Bitcoin dominance chart. It is crashing down and it is looking really good. And so that's your one sentence thesis. If you don't have one, you're guessing on a trade, and this is why a lot of people lose, because they think it's just gonna go up. You need to know what the market condition is, or you need to anticipate what the market condition will be. Second question is, where am I proven wrong? You need to pick one specific thing that if it happens, then you need to get out now. You need to exit your trades, or you need to set your stop loss there. And so there are 3 things to consider. A price level, which means that if WIF drops, or if Pepe drops, or any other meme coin that you're trading, if it drops a certain price, then you need to exit out of that trade because it could drop even lower. An example where you find out is you have to find out where a good support area is on the meme coin or the altcoin that you're about to take a position in. And so usually those support levels, right, where a lot of people are buying, usually they are at these major wicks, as you see. This is really where it's called the demand zone, in which it is the area in which a lot of people will place a lot of buys because that's where they think the price is a really good price to get in. If it breaks that, then it's a good chance it could drop lower. And so again, if it drops that price level, I'm out of that trade. You could take a look at Pepe for another example because I do love to trade Pepe. Here is a good demand zone right here. These are where these major wicks happen, where market makers usually love to wreck people and liquidate them before it shoots up. Here's another one right here. And so if you're taking a long around these levels, if it drops down there, then it might be time to exit a trade or perhaps set your stop loss around this area so you do not get liquidated and you don't get entirely wrecked. And another thing to consider is data flip. If funding spikes above 0.3%, then that means a lot of people are taking longs, and that is when market makers start to liquidate people because that's how the game is played. And the best way to check if a meme coin or an altcoin is great to take a trade in, I want to look at Turbo right here because these are one of the meme coins I love to trade. As you see, the funding rate is really good right now. It's 0.005%. On some exchanges like KuCoin, I don't like that exchange, very manipulative exchange. I try to disregard. I look for the major ones like Binance and OKX. If the funding rate is relatively at around these levels, I would say these are very flat levels. Anything over 0.03% is considered pretty high, and there's a lot of people taking longs, which means that the market makers are about to liquidate a lot of people. And so ideally, you want to look for funding rates that are 0.005% or perhaps even lower. If we take a look at Pepe right now, this is something that I would not leverage trade at this current moment. Those funding rates are insane, and I would not even take any longs until those are back to 0.005%. And so ideally, you want to wait for a leverage flush. That resets back to 0.5% when a lot of longs are liquidated. And the last thing is a news or event outcome, right? For example, if some big event happens, you start to see some rumors about some wars. Maybe you see an exchange about to get wiped out or somebody getting hacked billions of dollars worth of Bitcoin. Any sort of bad news event, it's time to exit your longs because it does get worse. Usually when a bad event happens, there's going to be multiple news that comes out throughout the next few weeks. And so it's not really a good idea to take longs at around that period. So again, pick one specific thing that if it happens, then you need to get out now or set your stop losses around that level. Third question you want to ask yourself before taking a leverage trade is how much am I willing to risk? Now, ideally, let's say you have a account that's worth $10,000. That's your account size, okay? Ideally, I've written down the percentages of what you can risk. Ideally, these are standard. If you risk 1% of, let's say, $10,000, that's $100. So you're only trading with $100 in every position. 5% mid-risk, this is usually what I like to do. If you're trading with $10,000, that's $500. If you want to be even more high risk, then you do 10, 20%. Over 20% is gambling, high risk. Again, I've seen people do it. I've done it in the past. When I had small account size, like less than $1,000, I'll usually leverage like 50% of that, which is obviously I don't recommend that. But if you're feeling a little risky and you got some extra money to blow, why not? Fourth thing you want to ask yourself is how does the crowd look? Again, what I mean by crowd is how do the funding rates look? Because the funding rates will tell you how many people are long. Usually when funding rates are less than 0.01% and open interest is flat, that means it's a relatively safe bet to take a trade on that altcoin. If funding rates are over 0.03% and open interest is up, then you're a bit late. You want to wait a bit until those funding rates is pretty much flushed out, right? Again, go on coinglass.com. Pepe is running hard right now. However, the funding rate is insane. I would wait until those funding rates get flushed, meaning I would wait for a pullback because taking a long at these rates is high risk. And you can check it across the market, right? A lot of people are taking longs right now, and it's only a matter of time before a small or major pullback happens. Again, open interest, OI, these are what you should be looking for as well. The closer to 1%, the better. But ideally, what a good scenario is 0.005%. Ideally, what a good scenario is if across the market is low funding rate. So keep that in mind. You do not want to leverage trade on an altcoin where it's too crowded because that means for market makers, it's time to liquidate some people. Fifth question you want to ask yourself before taking a trade is what is the macro trend? If BTC dominance is rising and major altcoins are red, then that means the chances of dumping increases. And so if we look at TradingView, the BT dominance is dropping like crazy. Altcoins are green. That means altcoins can continue to shoot up because look at that. Bitcoin dominance is just shooting down like crazy. And so what we're seeing is an altcoin season. But if that starts to have a major wick like this, it starts to rise up, I would wait a bit, maybe wait for a day or two and see how the market is. You just do not want to be taking longs if this Bitcoin dominance chart is shooting up because that means a lot of the money from altcoins are flowing back into Bitcoin. And going back to that, if Bitcoin dominance is going down and ETH and SOL are green, right? These are the major altcoins. Then it is a great window of opportunity to take a long on alts, again, as long as the leverage crowd isn't too crowded. And last question you want to ask yourself before taking a leverage trade is, am I calm on a scale of 1 to 10? Ideally, you want to be under 5 because when you take trades, when you're too excited, when you're too hyped, you usually don't make rational decisions. You don't make calculated decisions. You want to rate yourself before you're taking a trade. If you're over 7, you're way too emotional, you're feeling the FOMO too much, and you're not making logical decisions. I have taken trades over an 8, and I won some of those trades, and it gave me a bad habit. And that's a thing that you do not want to do. Last thing you want to do is get in bad habits of trading because maybe you'll win in the first week or two. However, you're going to give that back to the market if you won those trades from a bad habit. Because all what winning good trades is consistently having good trading habits, is consistently asking yourself the right questions before you take a trade because you're making calculated decisions. You're taking calculated risk. If I really just asked myself these questions every time I took a trade, every time I risked a lot of money when I started trading, I wouldn't have lost so much and I would have kept a lot of gains. So please do yourself a favor. Even if you're not trading leverage, even if you're looking to trade spot, even if you're looking to trade meme coins on Pump Fund or Bonk Fund, ask yourself these 6 questions. What's my one sentence thesis? Where am I proven wrong? How much am I willing to risk? How does the crowd look? What is the macro trend? And how calm on a scale of 1 to 10? And once you get in the habit of asking these questions before you take a trade, you're going to make a lot more money from trading meme coins and altcoins, and you're going to keep most of them. If you enjoyed this video, hit the subscribe button. I talk a lot about cryptocurrency. Subscribe to this channel if you want to learn how to trade crypto, meme coin gems, meme coin alphas. Thanks for watching, guys. I'll see you later.